Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's figure out what is happening and what we can expect moving forward. So as usual, if you enjoyed, don't forget to hit that like button as it does help a lot. This is not financial advice and I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below if you're interested, for $3 a month, where I share my intraday thoughts on Tesla as it's moving throughout the day. Pretty much what I talk about in this video, but you get it throughout the day live as it's happening instead of all after the market's closed at the very end, late information technically, I guess, if you will. Anyway, the point is, you get the idea. Let's jump into it. So Tesla closing the day actually nicely in the green, up about 2.33%, down actually. I'm looking at TradingView here because again, this doesn't show after hours, but TradingView here is showing. So up 2.33%, pretty much almost $243 per share, but we're down about 0.5% post market. And I'm not entirely sure what's bringing it down because the market seems to be not very happy right now post-market, but nonetheless, regardless, we'll talk about what we actually closed at, right? Which is again about 242, almost 243 per share. So compared to the market, okay, a pretty decent outperformance, right? Obviously the market fairly flat to slightly red, right? QQQ pretty much flat, right? Obviously it's red here because it's post-market. SPY pretty much, actually 0.2%. It's not too shabby, but all in all, a nice outperformance. So let's talk about what does it mean, right? So we talked about yesterday how I said how, in my opinion, in my eyes, right? At the very least, I was expecting 240 to 242, right? This is gap fill to happen, right? Which it did. We actually overshot that. We actually went above that, and we actually closed slightly above this gap fill, which is pretty good to see, right? The fact that we closed above the gap fill, I mean, again, it's barely above, so take it with a grain of salt in my opinion, but technically still above. So it's not bad. It's definitely better than below, but we did overshoot it. We went a little bit higher than I expected, up to almost 247 actually, which is not very far away from that 100-day moving average up here, sitting at about 248.5, right? But so we slightly overshot, but we talked about yesterday how I expected 245 roughly to be that kind of, quote unquote, best case scenario short-term level. And I'd be surprised if we go much further than that. And pretty much so far, at least, we've been pretty accurate about that. We did overshoot it slightly. Very common. I even told my members about this, how the market tends to overshoot the expected rejection or support areas sometimes, right? Because that's how you set traps, right? How else are you going to set traps? If the market just perfectly went exactly to where you were expecting it, perfectly dropped exactly to where you were expecting it all the time, and it was just that easy, everyone would be winning, right? The whole idea is the market will constantly overshoot, undershoot, and make you really just truly second guess your overall thesis or your plan moving forward, and maybe the plan you had and set in motion already, right? The market is very good at that, and that's kind of what it did here. It overshot it, probably trapped some bulls, and then of course it collapsed back under and maintained below that 245-ish level. Again, the 245 level is important because it is the level where of course the volume profile you can see substantially increases, and we pretty much run right up into it and then got denied right then and there. And it's just a little bit of an area of resistance as well. You can see back over here around these levels, right? Constant rejection over here. I'll probably even draw a line here, but we had support here, rejection here, support here. So it's a pretty important level, right? This low to mid, I guess, 240s area. So far finding rejection, but on the to give the bulls I guess a standing ovation, if you will, not a massive rejection, right? It could have been a much more severe rejection. In all honesty, I actually wouldn't have been surprised if we actually would even close below the 50-day moving average, which is sitting around 241. The fact that we didn't means that it definitely rejected. There's no question about that, but it wasn't that severe. It was a very okay rejection, right? It wasn't the biggest thing in the entire world. So take that for what it's worth as well. And then you want to compare that to the market. So very quickly, I want to super quickly look at SPY, right? SPY has been showing off a pretty bearish looking candle here. So there's two bearish things about this. This is, you can kind of make an argument that it's kind of a spinning top where essentially, slash a doji candle where essentially the body is very small, right? Fairly small and it's pretty much right in the middle with the wick below it and above it being roughly the same in length, but fairly long wicks as well. It's usually a top signal, usually something to be a little bit cautious about, right? It's not ideal. And of course, if SPY starts retracing, which at some point it will, because the market and especially QQQ have been absolutely skyrocketing, right? At some point, they will retrace. It's not a matter of if, it's a matter of when. And we are entering very close to overbought territories for the market as well. Now, with that being said, if SPY also has a pretty red day tomorrow and it has like a reddish version of this candle tomorrow, that would set up, I forgot what it's called. I think it's called like Evening Star or something. I always forget the names, but essentially it's a bearish setup where you have a candle like this, then you have this one up here kind of by itself, then you have another one that's kind of like this, but ideally red, that's like copy pasted, but just red essentially, roughly, give or take. I forgot what it's called, but that is a bearish setup as well, which isn't ideal. And that would be pretty much a double bearish setup. So that would be pretty bad for Tesla because of course that most likely will affect Tesla. Not always, but more often than not, it will. Now, But looking at Tesla specifically, right? The one thing I'm worried about is this. So like I said before, right, we talked about how Tesla on the daily it's been looking good for a long time, right? We said this for a long time. It's been looking good. Remember I brought up the example how, we had this nice little bullish kind of divergence-ish over here where this candle, even though it was at the same levels, it was peaking up higher, similar to what it did. I think it was here I brought it up, how it did the exact same thing. And then we had a beautiful rally. This is kind of where we're at right now, in my opinion, right? And then we consolidated sideways, a little bit downwards. And this is kind of what I expect. I expect pretty much this move right here to be right here. Right. And I pretty much think that we are pretty much right around this section right here where, maybe we can go a little bit higher, but ultimately I think we're near a short-term top. I think, well, at the very least, sideways consolidation, if not a little bit of redness, pretty much what we see right here. And then I think ultimately we'll rally towards the end of the month, which will be this situation right here, which will be kind of that Cybertruck rally, right? That kind of hype into the end of the month, Cybertruck rally and whatnot. And I do think that's possible. And then I think from there, we're into some, more questionable territory with December due to tax loss harvesting. But I pretty much expect us to play out this, and so far we've been playing it out pretty well, and we even called it before it happened with this candle here, showing the similarities between how it happened here and how it's happening here right now back on this candle 2 days ago. And that's kind of what I expect. So I do expect us to not really go too much higher for now, probably for the next week or so, maybe like the rest of the week, at least for sure as well. At least I think, right? Probably a bit of next week as well. Maybe the majority of next week, but I do expect consolidation at least, if not a drop, right? Now, like I said, because Tesla's showing a bit more strength, I'm not so sure if Tesla's going to come back down to the 200-day moving average to retest that, right? Which is in the low 220s rather. I'm a little bit less certain about that, mainly because it showed more strength today than I expected, especially closing above the 50-day moving average. What I personally expect is something like this. I expect us to roughly go sideways, maybe a little bit lower, but pretty much hug the 240 line, right? Give or take, right? The 50-day moving average, the 240s, somewhere around there, hug it. Ultimately, I think the 21 EMA is going to start playing catch up, right? It'll take a few days, like 3-4 days. It'll start getting pretty close. And then I think we'll come back down to it, right? Probably go to somewhere around the mid-ish to low 230s. And from there, I think we'll bounce off the 21 EMA and then climb back up and then overall come up to retest either the bull flag, top of the bull flag, which will be somewhere up here, which if that happens, let's say somewhere closer to the end of November, will be somewhere around like the low 250s roughly. Or potentially maybe even break out of the bull flag, which would be very bullish, but then come up to retest the blue line, which was that massive channel we were in not a long time ago, but a few weeks ago now, maybe about a month ago or so, and potentially retest the breakdown because we never have done that, which also around that same time frame will pretty much put us in the higher end of the 250s, maybe even low 260s. But that would also mean that we broke out of this bull flag. So that's where things will start getting interesting. But until then, that's kind of roughly what I project. Once we potentially start actually forming that and getting to that situation, we'll get more in depth about it. But as of right now, rough idea. If we get there, we'll discuss it further. But I do think we will. I really do think we will. I think Tesla's still, the daily looks great, man. Like I really have no complaints on this daily. It's very bullish. Broke above the 200-day moving average, even close above the 50-day moving average. I don't think it'll hold. I do think we'll drop below it, but that's not a big issue in my opinion, right? The 50-day moving average is less important than something like the 100, which is right above us. So we got kind of rejected by it, or something like the 21 EMA, right? But the point is we're above the 200 moving average, 21 EMA, still above the 50-day moving average, still showing that strength regardless, even though I think we'll drop below it soon for a little bit. The point is that the strength is there. The RSI is great. The MACD is great. It's hard to look at this chart on the daily and be like, it's bearish. The only thing that's bearish technically is the fact that it is up substantially over the last 4 trading days, and it is due for some consolidation cool-off period. Absolutely. But that's pretty much the only bearish thing I can take from this. Otherwise, it looks good, man. Like it's hard to look at this and be like, yeah, Tesla's going to go back down to 200. At least as it looks right now. Like it really is hard to see that. Honestly, it really is. So that's kind of the main thing I'm looking at there as well. But all in all, don't forget, we of course have the Bollinger Bands. We haven't looked at these in a while, so taking a quick look at this. We have a lot of lines here. I know it's looking a little confusing, but the green line, the white line, and the red line are the ones you want to look at. And you can see we are well above the green line on the Bollinger Band. So take that for what it's worth as well, right? That's usually doesn't last, right? Hugging either the red or the green line doesn't usually last too long, right? You usually start kind of bouncing to the opposite side somewhat soon. So just take that for what it's worth. We have, of course, the volume profile we talked about, right? We are, of course, pretty much right into that higher end of the volume profile. We're in this slightly higher one here, but you can see we pretty much came up right to this increase right around this kind of, mid 240-ish area, which is right where the 100-day moving average is. And so far we have gotten, a respectable, we'll say, what's it called? I'm like completely forgetting the word. Rejection. That's the word. So take that for what it's worth as well, right? But that's the main thing I'm looking at right now. Now, the last thing I want to very briefly touch on is when the daily and the 65-minute chart are not really showing any obvious signs of what may happen next. Obviously, we're extremely overbought on the 65, and we are starting to show, actually, we're now that we had more candles here, we're starting to show some signs of a bearish divergence because we're pretty much trading sideways here. More or less, we're going sideways, but we're starting to show, very slight signs of a bearish divergence. Nothing too crazy here, but where it's more obvious, in my opinion, is the 15-minute chart. Here you can see pretty much went sideways, right? Obviously, some highs here, some lower sections here, but for the most part, ultimately we went sideways. But you can see we've been making very obvious lower lows and lower highs on the RSI, right? So that's something to consider as well. So even though, we've pretty much been going sideways, the RSI has been softening up and weakening a little bit. So that to me is a bit of a bearish divergence as well. And I expect that to happen on the 65-minute chart as well, which I think ultimately will be what brings us back down to about the mid-ish, give or take, maybe low 230s, retest the 21 EMA, most likely bounce off of it. And I think from there, we'll continue with a very beautiful run up into Cybertruck events, into the rest of the month, or closer to the end of the month. And I think it'll look really, really great. We're due for a little bit of cool off. We are, the market and Tesla itself, in my opinion, at least. So we'll see. But that's kind of what I'm looking at, and that's what I am seeing right now. So with all that being said and done, thank you so much for watching. If you enjoyed, don't forget to hit that like button. And of course, as per usual, I will see you for the next one. Peace.